Hi guys, how are you? This is Abel Tejeda, the mortgage guy. Today we're going to be talking about different ways of tapping into the equity of your home. You can take cash out to pay off debt, home improvements, college tuition, or whatever it is that you need to tap into that equity. We're going to break it down. We're going to go over ways to do it if you're a VA. So if you're in the military, you have a VA loan. If you have an FHA loan, conventional, or if you're self-employed. And watch the whole video, because at the end I'm going to tell you a way of cashing into that equity without the need of refinancing your mortgage. So first, let's talk about cashing out if you have a VA loan. The best thing about a VA loan is that you're able to cash out all the way up to 100% of the value of your property. So let's say, for example, you buy your home for $300,000, now it's worth $400,000. That means that you have $100,000 in equity. You're able to take all of that out without having the need to pay for taxes. Now, on a side note, it doesn't matter if you're a VA, FHA, or whatever type of loan you have. If you cash out of your home, you don't have to pay taxes for that money. Next, let's talk about cashing out if you're self-employed. It doesn't matter what type of loan you have. If you're self-employed, when you bought the property, remember you had to use 2-year average taxes to be able to qualify for your loan. Now, with the new loans that we have available, if you're self-employed, we're able to use your bank statements to qualify you and be able to tap into that equity. So that equity no longer has to sit there and stay there until you sell. You can actually tap into it now. If you're self-employed, we can go all the way up to 90% loan to value, and everything based on your bank statements. We don't even look at your taxes anymore. So now what if you have an FHA loan? With an FHA loan, there are a lot of things you can do. For example, you know that when you buy your property, you start paying mortgage insurance. So now that you have equity, you keep building up more equity, you can tap into some of that equity, remove your mortgage insurance, and even though you're increasing your loan amount by cashing out, you're reducing your payment by removing the mortgage insurance, because now you have enough equity built in. So your loan amount goes up, payment goes down. So at the end of the day, even though you're tapping into the equity of your home and cashing out, you actually probably can end up saving money on your monthly mortgage payment. Now, as promised, the bonus, the bonus round. So how can you tap into the equity of your home and cash out without refinancing? The answer is simple. You can take a home equity line of credit or HELOC out on your property, or it can be a second mortgage. Now, there's no need to touch your first loan. If you have a really good rate, for example, if you were one of the lucky ones that got a mortgage in the 3s, you don't have to touch that loan. You can just get a home equity line of credit for whatever amount you need. You'll get a checkbook, you'll get a credit card, and you can use it. Every time you use it, you're using it against the equity of your home. But the good thing about that is that you don't have to touch that first and keep that low payment. Now, what's better, refinancing your whole loan or getting a line of credit or second mortgage? Well, that depends. Depends on your rate, depends on what credit you have at the moment. But the best thing to do would be for you to message me, send me an email, or write a comment. So that way we can sit down, see your scenarios, see what your options are, and decide what is the best for you. Thank you guys for watching my video. My name is Abel Tejeda, the mortgage guy, and don't forget to subscribe to my YouTube channel.